All right. If you're serious about investing, you need to know about public.com. That's where you can invest in everything: stocks, options, bonds, crypto. They even offer some of the highest yields in the industry, like the bond account's 6% or higher yield remains locked in even if the Fed cuts rates. What sets Public apart is how they give you the tools you need to make informed investment decisions. Their built-in AI tool called Alpha doesn't just tell you if an asset is moving, it tells you why the asset is moving, so you can actually understand what's driving your portfolio's performance. Public is a FINRA registered, SIPC insured US based company with a customer support team that actually cares. Bottom line, your investments deserve a platform that takes them as seriously as you do. Fund your account in 5 minutes or less at public.com/investing unscripted and get up to $10,000 when you transfer your old portfolio. That's public.com/investing unscripted. Paid for by Public Investing. Full disclosures and podcast description. Hey everybody, welcome back to Investing Unscripted, where we ask and answer the hard questions about investing, and when we can, get incredible guests on to ask them for their answers about the hard questions about investing and other stuff too, like their podcasts, their new podcasts. Jeff Santoro, my friend, we got Chris Hill with us today.
We do. And, we always have an upgrade when we have a guest on, but it's usually about investing knowledge. And now we have one where it's investing knowledge and podcasting knowledge. So we have upgraded massively by having Chris on the show. So Chris, welcome. Happy to have you here.
It is my pleasure to be here. Yeah, let's talk about podcast measurement and metrics, because that's what the Investing Unscripted audience really wants to hear.
Yes, absolutely. Lots of numbers and
exactly.
How many people have listened in the past 7 days?
Yes. All of the minutia that podcasters talk about when they're not actually podcasting.
That's right. All right. So we're not really going to talk about podcast metrics because only the three of us would find that interesting. But we are going to talk about your new venture here, Chris. So new podcast called Money Unplugged. So why don't you give us a quick rundown? What is it? How can people find it? What's the vibe? What do you got going on?
So everyone has a relationship with money. And that's really what Money Unplugged is about, is me talking with someone about their life through the lens of money, what it was like growing up, how their relationship with money changed as they got older, how they invest, all that sort of thing. I think while I know I'm older than the two of you, I think you are old enough that you remember MTV Unplugged. You remember that show.
Yeah.
Mm-hmm.
And that was a show that I loved because for those unfamiliar, MTV used to be a cable channel that showed music videos and had music on it. And they had this amazing show called MTV Unplugged, where they would bring in musical artists to be in a small studio space, a small audience, and they had to play acoustically. And among other things, as a fan of music, you could find out who can actually play when they don't have the electronics to rely on, who can actually play the guitar or the piano without any of the special effects that come, usually with a huge stadium concert. And so that sort of, that was one of my North Stars for this show, was to just sort of strip away what people often talk about and sort of just talk about the relationship that we all have, which is our relationship with money. And it's not a financial autopsy. I don't actually care about anyone's net worth. I'm more interested in their emotional approach to money.
Yeah, I totally remember MTV Unplugged, and I actually was not a huge fan of the show for that exact reason, Chris. As a musician myself, I was pretty critical about who could sing and who couldn't, and who could play guitar and who couldn't. I will say, though, the Nirvana Unplugged album is top to bottom, first note to last note, one of the best albums I think that came out of that time, and it was all live on that show. So that's my hot take, and we can move on from music and talk about podcasting again. So how often are you doing the show? Any previews you can give us about current guests or future guests that might get people excited to tune in?
So you had asked previously, where can people find the show? Wherever they're listening to podcasts, whatever podcast app they're listening to us talk right now, including YouTube for that matter.
Hit pause, people. Hit pause right now. Search for it. Add it to your feed. We'll wait.
There you go. And we're back. So yeah, you can get it wherever you get podcasts. A couple episodes are out. I think by the time this episode of Investing Unscripted is out for people to listen to, Morgan Housel was kind enough to be my first guest. Dan Pink, a best-selling author that I think some people might be familiar with, is the second guest. And Christine Benz from Morningstar. I got the chance to head out to Chicago and visit the Morningstar offices and sit down with her. So she's episode number 3. In terms of upcoming guests, in terms of sneak previews, I guess one thing I would say, and this is almost a cautionary note, I would say to anyone who's thinking about checking out my new podcast, is that it's not all going to be finance people. I'm interested in talking to people about their experiences. And yes, some of them are absolutely going to be people who are in the realm of money, people like Morgan Housel and Christine Benz for sure. And I'm not going to name names because these guests haven't been nailed down yet in terms of recording dates. But for example, I'm talking to a stand-up comedian about sitting down with him and talking about his relationship with money, a filmmaker. So these will be, I guess, some curveball type of guests that you wouldn't necessarily hear in the business category of your favorite podcast app.
I think that's great, because the reality is that a lot of people in finance, this isn't writ large, this isn't true. A lot do have like the typical path, right? They come from a family, probably had a parent that was involved in finance, got them down that track. They went to business school, they studied finance, they spent their time, and they cut their teeth as in money in some way. They're the outliers out there, like Morgan's. I want to say I listened to Morgan's episode earlier today before we started recording, and Morgan is an open book in a lot of ways, and it's so refreshing to share somebody that came from a background that was probably more relatable for most of us than a lot of the people in the finance world. So hearing about really successful people in other ventures besides money that have made a lot of money in other things sounds pretty relatable to me.
It is. And I also think the anxiety portion is relatable.
Yeah.
And that's something Morgan talked about. It's something Dan Pink talked about. And I think it's something we all experience at one point or another. I think, guys, it's one of the reasons that people listen to podcasts like Investing Unscripted. Money is, for as much information sharing as there is today, and how easy it is for us as investors to get our hands on information, it is still largely a solitary endeavor. And we all have those moments, whether it's you've got your finger over the buy button of a stock and you have that last second, wait, should I actually buy shares of this company? Should I actually sell this stock? That sort of thing. We all have those moments of uncertainty. And I think it's both natural and easy to look at someone like Morgan Housel, someone like Dan Pink, these hugely successful authors, and from a distance just sort of think, well, they've got it made. Life is a cakewalk for them. And you listen to the episodes and you hear that, no, there have been and continue to be moments of both uncertainty and anxiety when it comes to money.
Well, yeah, I think there's people I know in my life who I've seen both stories where it's like very successful in the world, but have no real concept of like personal finance or how to save or how to invest. And then I've met people who, like, you work with them and all of a sudden they're gone and you find out, oh, they just stopped working because they've been investing since they were 15 and they have a $6 million portfolio and they're just gone now. And it's like, I never would have seen that coming. Like, I had no idea that person had that. And I think everyone's background is different. And, I think the first story is probably the more common one, where people don't get taught this at a young age and then have these formative moments at some point where they kind of figure it out. So I think that's really interesting. So with your permission, Chris, I think it'd be fun to ask you at least one of the questions that you ask your guests.
Let's put the shoe on the other foot here.
Yeah,
absolutely.
So what are some of your early formative memories about money?
I'm the youngest of 4 kids. I grew up in a relatively small town in Maine. My father was a doctor. And I guess my early thoughts around money are I didn't really think about it all that much. I had the luxury of not really worrying about money.
Yeah, I was going
And
to say that tends to mean that there probably was money if you weren't having to really think about it.
there was money. One of my brothers and I were talking about this recently about how we never had to worry about money in the way that kids often have to worry about money, which is that they hear their parents possibly arguing about it,
Yeah.
or there's a concern that bills are going to go unpaid and we might have to move. We might lose the house. We might have the electricity shut off. And we were shielded from all of that. And that was, such a gift as a young person growing up. How that boomeranged on me was when I got out of college.
Yeah.
And I was living on my own. And
You
it
didn't know what the hell to do.
probably took me 3 years to feel like I was competent with money. Not great with money, just barely competent. I am paying my bills on time. I am paying down the credit card debt that I racked up immediately after graduating from college because
At least you waited till after graduation.
but I never really connected spending and saving and all that sort of thing. Investing came even later. But growing up, it was just sort of, it was something I didn't really think about until, of course, you get to that point where maybe you're 7, 8 years old and you start to realize, oh, this is a thing that if I have it and I have permission from my parents because it was the 1970s, I can go to a store and buy something. And that was really it. It was like, oh, I have a quarter. How much candy can I get for 25 cents? Let's find out.
Yeah, I had a similar upbringing in the sense that I didn't have to worry about a lot of the things you did too. And the way it boomeranged on me was I got to a point where I knew if I really got jammed up, I could probably have my parents bail me out. I mean, to some extent, not something insane. But then also having this realization as a young adult, I don't want to have to ask my mom for money. It was like a sense of pride thing. But I only realized later how privileged I was to even have that as a fallback, and how much that probably impacted my lack of paying attention to all this stuff in my 20s. Because there was a little thing in the back of my head that said all right, if I really need a little bit of money, I know I can find it. And yeah, so I for at least for me personally, pretty privileged in that sense.
So one of my favorite things about talking with you, Chris, this isn't to say that you're not interesting in your own right, but you've had some
always a
great
good way to start a question, Jason.
Right? Yeah, I'm going to compliment you by insulting you. You've talked to a lot of really interesting people over the past couple of decades in your prior work as a podcaster. Your work with the Motley Fool for so many years. I'm curious, thinking about those conversations and the experiences that you've had over the years, how much of that kind of informed your decision for the idea of Money Unplugged?
I would say over time in aggregate, it had a decent amount to do with it because it's something I've gotten more interested in the older I've gotten. I still love stocks. I still love businesses and I'm interested in businesses and the people who lead them. But this was the type of thing that I gravitated towards in part because one of the things I loved in all the interviews I did when I was at the Motley Fool was getting to talk with someone who wasn't afraid to be nuanced. So much of sports media, so much of political media, and I would argue financial media is cast at us in terms of black and white. Yeah. It's just either you're a bull on this stock or you're a bear on this stock, and there's no room for in between because that's the most compelling thing on financial television.
Even though the in between is the reality most of the time, it doesn't make for good TV.
Yeah, absolutely.
Yeah,
and along those same lines, Jason, just the whole idea of the more you can take the long view as an investor, the better off you're going to be in terms of letting compound interest work its magic the longer you hold a really great stock. And so, that along with just sort of the nuanced conversation and again, sort of peeling away I don't want to say artifice, but just sort of peeling away the usual things that people talk about or the usual things that guests are asked about. Jeff, you asked me, can you give a sneak preview of some guests who are upcoming? Once we're off the air, I can give you a couple of names of people who said no to me because they didn't want to talk about money. It's not that they're not smart and accomplished. They are. It's not that they're not well-versed in being interviewed. They are. They just didn't want to talk about money because it's a personal topic, and I understand and respect that.
Hey, everybody, we'll be right back, but first, a word from our sponsors. FinChat.io is the complete stock research platform for fundamental investors. They have all the standard financial data on more than 100,000 stocks globally. But beyond that, they have company-specific segment and KPI data on around 1,800 stocks. So for example, do you want to see NVIDIA's data center revenue growth? They've got it. Do you like to track Apple's iPhone sales? They've got that too. Or how about nights and experiences booked for Airbnb? You guessed it, they've got it. And they just added around 8,000 ETFs and mutual funds to the platform. The breadth of FinChat's data is truly one of a kind. I use FinChat every single day as I'm researching the stocks in my portfolio, specifically when I want to see how they're doing on KPIs that FinChat is famous for. So to get 15% off any paid plan, go to finchat.io/unscripted. That's finchat.io/unscripted to get 15% off any paid plan today. The link will be in the show notes.
All right. If you're serious about investing, you need to know about public.com. That's where you can invest in everything: stocks, options, bonds, crypto. You can even earn some of the highest yields in the industry, like the 6% or higher yield you can lock in with a bond account. Public is a FINRA registered SIPC insured platform that takes your investments as seriously as you do. Fund your account in 5 minutes or less at public.com/investing unscripted. Get up to $10,000 when you transfer your old portfolio. That's public.com/investing unscripted. Paid for by Public Investing. Full disclosures in podcast description.
Yeah, it's interesting because I've had the experience just doing this podcast with Jason for the last couple of years. Like when we've had people on that we're not friends with, that we don't know, just someone that we reached out to and they were kind enough to come on. I find myself wanting to ask questions I know I can't ask because I don't know them that well. And, people come on different types of shows for all different types of reasons. Like they're there just to promote this one thing, or they're there because they wrote a book or whatever the thing is. So, I really like the idea of being able to have what I think are more interesting conversations. But yeah, you have to find people who are willing and able to be on the other side of that conversation in order for that to work.
Well, money is feelings. And let's be honest, asking those initial questions, a lot of times people's formative memories around money and finance, that's kind of where they stop. That's it. That's where they live the rest of their life with their relationship with money. And luckily for a lot of them, they earn enough to be able to operate beyond those emotions in the real world and function. But a lot of people never develop the emotional skills around money to make the transition. One of the things Morgan talked about is coming from a starting point of his early memories. This is the first episode of your show that I'm going to describe. His first memories around money of basically being poor. His parents were still in school and there wasn't enough. And how quickly that changed once they emerged in the professional world, and how this very thoughtful person finally realized at some point that money is a tool, right? And it's a tool to make your life better. You talked about that with the recent house they bought. Finding a way to evolve, I think, is such a healthy thing. And it's so much bigger than knowing which damn stock to buy, because if your relationship with money is broken, fundamentally, it doesn't matter the stock advice that anybody gives you, right?
Absolutely. And I think that, something you just sort of hinted at there, Jason, is, money can solve some problems, but it can't solve all problems. And there are times where it's like, hey, and you see it with certain celebrities where no amount of money appears to make them happy, and no amount of money will sort of fill the hole in their heart, that sort of thing.
Yeah.
And it is one of those things that I think everyone probably wrestles with to some degree, that the comparison that is so easy to make, or to assume, well, that person is driving that car, so they must be happy about everything in their life.
Right.
And I'm driving this thing, and and now I feel a little bit worse about my life. And so the phrase compare and despair is something that doesn't just apply to sort of our physical being and our relative attractiveness, that sort of thing. It also applies to money as well. And I think that's why I think it's so interesting to talk about, but it's also one of the challenges that I think we all have.
Yeah, I'm certainly I certainly am a believer in the idea that money can't buy happiness, but I'm willing to try.
Willing to try.
I'm willing to.
Yeah.
I'm willing to kind of make as much money as I can to see if I really don't know until I know. So I have to try to find out.
Be a giver, Jeff. That's a sacrifice you're willing to make for the sake of humanity. So,
that's right. That's one way to look at it.
The right thing. It's the right thing to do.
So, Chris, I know we're talking a lot about your new podcast and what people can look forward to, but as we've alluded to, you have also you are an experienced podcaster who has interviewed many, many people. And I'm just curious, over all the years of interviewing people in the business world, talking about money, not maybe
so many
personal
years, Chris. You've done this for so long, so old.
But I'm curious, did you over the years pick up on things from, talking to all these smart people that changed the way you thought about either money or investing? Do you think having all those conversations over those years actually had an impact on how you saw the world?
It absolutely had an impact, and a positive one. I think first and foremost, I was lucky in that I had the opportunity to interview a lot of smart people. And if you talk to a lot of smart people and you're paying attention, some of that knowledge starts to rub off on you, at least in my experience. And so that was sort of one of the takeaways I had from all of those interviews was just, I can't tell you the number of times I finished interviewing someone. Oftentimes it was over the phone, and I would take off my headphones and, turn to whoever else was in the room or on the other side of the glass and just say, my God, that person is so smart.
Mm-hmm.
And so, just having an appreciation for their intelligence, which was hard earned. It was clear that they were, oftentimes it was an author who had done a deep dive on a particular topic. So respecting that intelligence and the research that went into it, that was part of it. But also to go back to, realizing that money is an emotional topic. I purposely, when I was thinking about this show and started to write out who are the types of people I wanted to interview, a friend of mine asked, well, who are you trying to interview? And I named some people. Again, some are people like Morgan and Dan Pink, but others are people who are decidedly not in the finance space. And my friend said, so what do all these people have in common? And I said, they're smart and funny. I said, that's who I'm looking to talk to, people who are smart and funny. Because if they're smart, I can learn from them. And if they're funny, they probably have an emotional intelligence where they will feel at least comfortable enough talking about money and their relationship with it that they'll come on my podcast. It's not to say it's a laugh riot, but there are some moments of humor here and there.
Yeah,
Well,
I've been looking for someone who's smart and funny to do a podcast with for each day.
Brutal.
Wow,
my God, the drive-by shots on this show.
I had to get that one in before he made the same joke about me. So.
No, that's exactly right. You beat me to the punch. That's for sure. So,
Investing Unscripted is brought to you by the Chit Chat Stocks podcast. That's right, another investing podcast you need to add to your listening rotation. My name is Brett, one of the hosts, and I produce 2 episodes weekly along with my co-host, Ryan Henderson. On the Chit Chat Stocks podcast, we talk stocks, a lot of stocks, from the hottest names to undiscovered gems, interviewing sector experts, studying super investors and why they are successful, and we have a fun time while doing it. Follow the Chit Chat Stocks podcast on YouTube, Spotify, or Apple Podcasts, and never miss an episode.
Well, Chris, I want to take this last question here and flip it the other way. And we can talk to lots of great people, and we can read Warren Buffett's annual letter where he talks about the dumb investments that he made. We can come on here and talk about how bad of an investor Jeff is, especially with options. All we want, but some lessons, it does seem like you can only learn them through your own experiences. And are there things that stand out to you in your experience that that's kind of the same way?
Absolutely. I would say risk tolerance is probably near or at the top of the list, I would say, in terms of things you have to experience for yourself.
Yeah.
We all, when we're starting out as investors, we all have an idea of what we think our risk tolerance is. And then you have a bear market, or maybe it's just a bear market with that one stock that you were supremely confident about. And that's when you find out what your risk tolerance actually is. Not what you think it is, but what it actually is. And the only way you're going to find that out as an investor is to exceed your actual risk tolerance. That's how you find out what it is. You have an experience so bad that you're much better informed about what your risk tolerance actually is. And you think, oh, okay, I shouldn't be 100% in growth stocks, or whatever the example is. But I think for people, and, guys, we saw this most recently in 2021. You think back to that bull market that really took off and brought a lot of new investors into the market. And kind of like all bull markets that bring in new investors, once things start to go south, some of those new investors are upset and furious and think, wait a minute, I thought this was easy. And they leave investing in the stock market altogether.
Yeah.
And I think
and 25 years later, we still hear them complaining about it at Thanksgiving.
Exactly.
Yeah.
Exactly. But the patient investors are the ones who have a little bit of introspection and say, okay, well, I thought my risk tolerance was higher than it actually is.
Yeah.
I just got my butt kicked. Let me see if I can recalibrate and move on. And the ones that are able to do that are the ones that are much better off in the long run, both financially and otherwise.
Yeah, to me, that's the double-edged sword of how easy it is to get started as an investor now. I mean, it was always fairly easy, but you can just download an app, deposit money, click a button, and you're a shareholder. And, I think a lot about, I've said this before on our podcast, but I really thought I was a great stock picker in 2020 and 2021. I can't believe this is so easy. And it's only that I had that feeling, I think, at my age and not in my 20s. And also the fact that I had started to learn on my own at that point, that I was able to do exactly what you said and kind of recalibrate. And all right, I'm not a genius, but I'm also not going to leave this and never come back to it. But I truly don't know if I had had that exact same experience 20 years prior, I might have been exactly in that camp of well, nope, got burned. I'm done with that. And then just not worried about it for the rest of my life.
I have that exact same thought every few years, because every few years we typically have one of those type of bear markets, whether it's officially a bear market or it's just a bad couple of weeks or whatever it is. I do have that thought that, I was in my early 30s when I really got punched in the mouth hard, and I'm glad it was then and not when I was a teenager or right out of college, that sort of thing.
Yeah, for sure. So I'm curious, is there a lesson that you've learned about personal finance, investing, money generally, that you wish you knew you had learned way earlier in your life? For me, it's just start. Should have started sooner with a little bit more capital. I didn't understand how risk worked. When I was 22, I was scared to lose money, but that was the time to be risk on because I had such a long horizon in front of me. That's the lesson I wish I knew. Spent a lot of time catching up because I didn't know that. But what about you? What's the thing that you wish you could shake late teen, early 20s Chris Hill and scream in his face so he would learn?
I'm going to give you a very specific investing focused one. And it has to do with dividend stocks. And the only defense I will give myself is I think the general attitude in the investing community has changed over the last decade when it comes to dividend paying stocks. There was a very long time when dividend paying stocks were just seen as boring, stodgy, not innovative at all. And it was really something that, retirees invested in, that sort of thing. I think that changed.
Widows and orphans, right? That was
widows and orphans, exactly.
Yeah.
And I think that changed in no small part about 10, 11 years ago when Apple started paying a dividend.
Right.
And there was, you guys may remember, there was like in the lead up to that, Apple was amassing all this cash on their balance sheet. And there was a good 2 to 3 years where every quarter when Apple reported earnings, there would be this, discussion. Are they going to pay a dividend? What would that mean? Empirically, if they start paying a dividend, do they no longer become cool and innovative and all this sort of thing? And it's something I mention now on the occasions where I'm speaking to college students, where I just say, if I could, it's always tempting to say, well, if I could go back to my 20s, I would buy shares of, Microsoft when,
No, that's too easy. That's too easy.
But the one that actually does apply and then, can be passed on to younger people without the benefit of a time machine is take a good look at dividend paying stocks, particularly ones that are, start with the dividend aristocrats. Matt Argesinger at the Motley Fool has the Dividend Knights, which he has put together. And it's such a great way to quickly whittle down thousands of companies down to, a couple hundred or even fewer. But I think it's a wonderful screen. And it is the sort of thing in the same way that, compound interest works over time. Companies that pay a dividend and just keep putting that cash in your account every quarter or every 12 months, that can really pay off for investors.
And the interesting thing about it is mentioning Matty A's approach is empirically the data is pretty clear that by the time a company is a dividend aristocrat, you've waited too long. It's when they've been 5 years in, they're paying that dividend, they're growing it every year. 10 years in, these are the companies that are still young and growing their cash flows, but they have the moats, right? They have the strong business, and the dividend serves the purpose of keeping management from doing something dumb with that money. And they let you do something dumb with it instead, right? But the point is that you're still buying the business when it's worth buying for more than just the dividend, right? And the dividend is a signal that this is a really good cash generative business, and you don't walk into a 3M where you buy it entirely. Oh, they've been growing that dividend for 52 years. How can it possibly? Well, guess what? They stopped doing all the innovative, growthy stuff that have made it a powerful business. And right. So that's one of the ways I think about it.
Yeah. And also it's not a decision that companies take lightly. I think that, it is often seen as like, well, they just decided they're going to do this. It's like, no, they had so many meetings at their company before they decided to actually start doing this, because they are all smart enough to realize that once you start paying a dividend, you do so with the confidence that you can keep it going.
Or maybe it was just Mark Zuckerberg saying, I want a dividend. And the rest of the board said, okay.
There are those occasions as well.
I think I really like that as a thing you could wish you could tell your younger self. Cause I was thinking as you were giving your explanation, like when I first started buying stocks, like I only started buying individual stocks about 5 years ago. And my big concern was I didn't want to lose money. I had no idea what beating the market was at that point. I just wanted to see green and not red in my brokerage account. That was like number one. Cause I was like, I thought if I was losing money, I was failing. And then my mindset was like, well, if I can just get more than interest, then I've done a good thing, because this money would be sitting in my savings account. And at that time, interest rates were near zero. So, but what I've learned over time, having owned dividend paying stocks for the past several years now, is like, if your goal as a new investor is to just sort of like not lose money, like it's a built-in cushion, and I have plenty of stocks that are red in my portfolio now on a share appreciation basis. But when I include the dividend, all of a sudden it's in the green, right? So because that's an extra 2, 3, 4% of total returns that you're not thinking about when you're just looking at the share price. So I think that's an interesting thing for younger investors to think about, even though what I said earlier about being more risk on would probably tell you step away to not go towards dividend paying stocks.
I've just had an observation though, thinking about the idea of, your future self telling your younger self, offering that advice. Of the three of us, younger me is certainly the least likely to listen to that advice. Now, maturity is a clear part of the reason why, but also he would probably just assume that he had a fever dream about a bearded Doc Brown. Because I'm the one that's got the hair to be like a time traveler, to go back and do that. So
yeah, younger you would be like, who the hell is this guy coming to see me?
Yeah. There was no point in that, Chris. There was absolutely no value that added.
I sometimes just have to move forward when Jason starts speaking. I'm curious. So you spent so many years doing the podcast for the Motley Fool, and you literally were paid to think about the stock market, think about what was happening. I'm just curious, in the time that you've been off the air, right, getting prepared for your new venture here, what have you noticed? Like, as you look at the market and what's happened with stocks and just overall macroeconomic stuff.
Let's talk about AI, Chris. We're talking about deep speak.
Well, not even just that, but like, you're someone who spent all that time spending such close attention. I'm sure you kept paying attention even when you weren't talking about it every day. So I'm just curious, like, as you look at the market where it stands today, what overall thoughts you have?
I actually pay less attention now that I'm not hosting a daily show that's centered around business news.
So healthy.
One of the things I have noticed is a point I had touched on earlier in this conversation, which is just how persistent the financial media coverage of the stock market, of individual companies, how persistent the media is in casting things as pro or con, bull or bear, hot or not, whatever example you want to use. And it's one of those things where I just sort of look at that and go, no, it's so much more. Like, no, I've seen this movie before. I know how it ends. I know that it's so much more complicated than this and so much more nuanced than this, that sort of thing. So that's one of the things I've noticed. And I guess the takeaway for your listeners is really try and put the headlines aside. Like, headlines are there just to grab your attention.
Yeah.
If it's a company you own shares of, great, get past the headline, and you want to read the story or listen to an analyst talk about it, go into the weeds, because it's a company that you're a part owner of. To the extent possible, just ignore the headline and try and get to what's actually happening at the company. So I think that's one thing. The other is, this point always reminds me of someone like David Gardner, co-founder of the Motley Fool. It is how often, and I'll just use one company as example, how often over the last 15 to 18 months, some smart person has said, I think this is the top for NVIDIA. I think this is it. I think this is an overvalued company, and I think this is it for them. The willingness, sort of a subset of what I talked about with the financial media, a subset of that is the number of people who are just willing to come out and say, I think it's time to sell this great company, this amazing company that's been a tremendous performer, and now I'm just saying any blanket, not just NVIDIA, but any great, it's like this great company, they've had a good run, but I think they're done now. I was like, really? You think they're done? Okay.
Well, I mean, Chris, but it's the same reason that the people that got a crisis of some sort, right, that called the financial crisis or called a bear market, they get one right, and they get a call once a month by somebody to make a few $100 to do an appearance for the next 15 or 20 years. even though they called that one they got right 20 times before that they were wrong about, right? So that's, I mean, again, that's the realities. It's about getting viewers to pay attention. And here's the framework I apply to this, and I'm curious your thoughts about it before we start wrapping up. When it comes to the financial news, write-ups, headlines, that sort of thing, my framework is if this is something I'm really interested in and I want to read, I want to learn more about, then I do it because I enjoy it. If I feel like I have to, then there's probably one of those base emotions, fear or greed, behind it. And it's probably time to put my phone down and walk away.
I think that's spot on. I mean, I think that's, to the extent that anyone can detect, I think my emotions are guiding my actions right now.
Yeah.
I think that's where you want to get as a human being, and especially as an investor.
Yeah.
You
It's
want
not just investing.
Right. It's not just investing, but it definitely is investing, where it's just sort of like, okay, wait, why am I thinking this? Why am I acting this way? What's really behind this? As opposed to, am I thinking about selling this stock because I'm emotional right now? Or am I thinking about selling this stock because I'm about to put down a down payment on a new house and I need to sell some stocks? That's an action-oriented way. That's a much healthier way to think in terms of like, oh, I have this financial action I need to take. I need money to take it. Therefore, some of these stocks have got to go. Which ones should I be selling? As opposed to, I saw a headline on my phone, I got an alert on Twitter, and now maybe I need to sell all my shares.
I think what's helped me, ignore the headlines and the talking heads on the cable channels is just being a natural skeptic. I've joked with Jason before that I have this like everyone's an idiot theory. It's like a filter, right? It's like a filter. I make myself think like everyone who's on TV talking about investing in stocks is an idiot. And I don't mean that literally. It's a way for me to say like, they clearly don't really know. Because if they did, they wouldn't be, to your point, Jason, taking a couple $100 every couple months to make a hit on CNBC. They'd be rich on an island because they would know exactly when to buy and sell all stocks. Like that was the piece I could never wrap my head around when I was brand new. I was like, why is this person on TV for giving away this information for free if it's really correct?
Can I tell you my version of that?
Yeah.
My version of that is someone who got wealthy being an expert in one area, and now they're weighing in on something else. And there's a what's the cognitive bias that they call it? Expertise transference or something. I can't remember the exact term, but we do that where we take somebody that's first, they do it, right? They assume I'm really good at this, so I'm going to be really good at this too. And then we do the same thing. Oh, this guy was really successful at this thing. He has to know about this other stuff too. And you're assigning their credibility in one thing to something that they know less about than maybe you do. Yeah. The example I always use is Albert Einstein. It's like, if you have a problem with physics, give Einstein a call. If someone's having a heart attack or someone needs emergency surgery, Einstein's not going to help you. You need someone else. You need an actual doctor.
There you go. Go.
All right. He'd probably have a better than average chance at helping you, I would assume. Whatever.
I mean, better than me, but if it's between Einstein and a doctor, go with the doctor.
I mean, I never saw Einstein's portfolio, so I'm certainly not taking stock tips from him.
Definitely not.
I'm going to point out that Einstein's no longer with us. So, I mean, anybody besides him would be better. I know. If you have a medical emergency, he's not even on the table here. So
not even an option.
Yeah. All right. Well, Chris, this has been a fun conversation. As we wrap things up here, I want to give you the last word. Anything else you want to share with us?
No, there's nothing else. I feel like I've shared everything. I know that, if I had a publicist, they'd be like, plug the podcast one more time. And it's like, at this point, anyone who's listening to this episode of Investing Unscripted, they've already heard about the podcast. And I love what we've talked about. Like, I love the way that, this has been a very enjoyable conversation. I love that we've, name checked some stocks, but also talked about investing approaches. Because I think it's it only becomes more important. The quicker information moves, the greater people are relying on AI. And I'm not one of those people who's like, all AI is evil. I'm not one of those people. But I think that thinking critically about our emotional relationship with money, our emotional relationship with our portfolios, I think that's more important now than it's ever been in the past. I just love that shows like yours exist.
Oh, well,
Thanks.
what a perfect way to end.
Yeah. Well, I can't let it in there because I want to say this, Chris. This is maybe the best publicity that I could possibly give for your podcast. I don't really listen to podcasts very much. I have a few that I listen to, and I listen to almost zero in the realm of money and investing. Yours is going to be a part of my regular rotation. It's good to have you back in the game. And it's the exact kind of conversations that more people need to be listening to. So I'm excited that you're doing it.
I appreciate it. Thank you so much, guys.
All right. Thanks, Chris. Great having you on.
All right, everybody. Always remember, we love to give our answers, have great people like Chris Hill come on to share their experiences and answers about money, investing, and finance. But you have to own your own answers. Find your answers for yourself. You can do it. I believe in you. Chris, thanks again for coming on. Jeff, we'll see you next time.
See you next time.